When demand for gold and silver surges, there won't be enough new ounces to mine, nor enough miners to dig them up, nor enough schools to educate a new generation of miners. In short, it's virtually impossible to fill future demand, at least at today's prices. Something's got to give, and that something is price. But even with a price explosion, there has to be a giant overshoot. No, you can't just magically come up with a whole bunch of silver because the price rises. It's going to take years. It's predicting mid-triple digits. And I really do think that we are going there, and we're going there sometime soon.
Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any gold-silver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit goldsilver.com/free silver to claim your silver.
Hi, it's Mike Maloney and Alan Hibbard once again with the Gold Silver Show, and I believe you have a viewer comment that we are going to respond to, don't you, Alan?
Yes, I do. Thank you, Mike. Yes, and this is the comment right here. It was on a recent video we did on silver, and Tino says, won't a massive supply open up once silver takes off in price? And wouldn't that prevent its further rise in price? So in other words, isn't the best cure for high prices high prices? That's sort of what he's thinking here. If silver can be mined at roughly $11 to $20 an ounce, then the profits for mining and even recycling would be crazy, right?
Yeah, and he is right that the profits would be crazy. And there will be a rush, and that's what the great gold and silver rush of the 21st century is about, the book.
Yeah, I got curious about this because $11 to $20 an ounce, it's first of all a big range, and I also thought maybe that's a little cheap. I wasn't sure that it would be like that. So I did a little research, and I found the all-in sustaining cost of silver production. This is a chart I found. And going back to 2010, it was roughly $10 per ounce. But as you can see, it's gone up quite significantly since then, hitting $20 an ounce roughly in the COVID era, like mid-2020. And now it's up near $27 an ounce. So it's a bit more expensive to mine, each ounce of silver, and it looks like it will certainly continue to rise. So the profits won't be quite as significant as what Tino was suggesting, but they'll still be big, won't they?
Yes, but this is this is the average cost too. So I would imagine that there is no one mining $10 silver, that just does not exist. And so the cost of mining silver is probably like $22 to $30, $33. And here we are up at $37, $38, $39 right now. However, only about a third of silver production comes as primary silver production. More than 2/3 is as a byproduct of mining copper, lead, zinc, and gold. When there is a robust global economy and we're building a lot of homes and we're building cars and we're building stuff and people are all buying stuff and we're all feeling good, then there's demand for those base metals, and they just happen to stumble across silver while they're mining those base metals, and it gets sold into the market at market prices. What happens when the 2/3 of the production slows down because the global economy slows down? So there's that factor, but then there's a whole bunch of things that I need to point out. This is from the great gold and silver rush of the 21st century that you and I spent so much time on, Alan. As the great gold and silver rush of the 21st century unfolds, explorers and developers will once again proliferate. So this is what the viewer is saying. Or will they? These endeavors are capital intensive and seldom rewarding. The path from discovery to production took 5 to 8 years in the 70s. Now it's more like 10 to 20. So yes, if there's a bunch of profit in there, you are welcome to go and try to open a mine. Good luck with that. it's going to be at least 10 years, but probably more like 15 to 20 before you are actually open and producing. The cost of these projects has ballooned to hundreds of millions, if not billions of dollars, and that's for the deposits that are easiest to reach. Now, we mostly focused on gold here, but the same thing goes for silver in all of these paragraphs here. And that's for the deposits that are the easiest to reach, have the highest grades, contain the most ounces, and are located in politically favorable jurisdictions, all of which limits where miners will even go. The hard facts are the number of large deposits discovered in each decade from the 70s through the 90s, included at least one 50 million ounce deposit. I think you've got a snapshot. So put that up, Aidan, would you? Yeah. 150 million ounce deposit and at least 10 30 million ounce deposits. But since 2000, the industry has found no 50 million ounce, no 40 million ounce, no 30 million ounce deposits. Now we are finding just a few 15 million ounce deposits instead. In fact, it's becoming increasingly difficult to find a deposit of just 1 million ounces or more. Now that is gold that we are talking about there, but the same thing goes for silver. Then there's a section called Where Have All the Miners Gone? A few years back, my friend and colleague, Jeff Clark of goldadvisor.com, noticed that the majority of geologists and mining engineers were between 50 and 80 years old. Who will take up the slack once this generation hangs up their picks and shovels? No one. The glamour today is all in software development, artificial intelligence, social media, and so on. You know, we wrote this in 21 or 22, but it still holds true today. That's where the action is. Dirt? Forget about it. The Bureau of Labor Statistics predicts that by 2024, which we're already a year past, a third of mining geologists, geological engineers, will likely retire. Well, a lot of them are working a lot later, but they're just getting older, and there's nobody coming up to replace them. Imagine if the tech industry lost 1/3 of its programmers, or a third of the oil industry's engineers called it quits. Both sectors would be devastated. This is precisely what's happening to the mining sector. The next section, the School of Hard Rocks. Adding to the problem, the number of accredited U.S. mining engineering and mining technology schools is down to just 13. No schools, no new miners. Students simply don't want to enter the mining sector. How bad is it? In 2020, U.S. schools awarded 199,790 engineering degrees. The number of these grads who are mining engineers was 327. That is 0.16%. 0.16%. To summarize, when demand for gold and silver surges, there won't be enough new ounces to mine, nor enough miners to dig them up, nor enough schools to educate a new generation of miners. In short, it's virtually impossible to fill future demand, at least at today's prices. Something's got to give, and that something is price. But even with a price explosion, there has to be a giant overshoot. No, you can't just magically come up with a whole bunch of silver because the price rises. It's going to take years for all of this to go back into balance. And we've had a deficit, a structural deficit for 5 years. And then if you add the investment demand to it, it's a deficit for 7 years that we've had, where we're gobbling up more silver than is being produced globally. And so we are right at the inflection point right now. And this 45-year cup and handle that I identified, I don't remember how far back it was, but I'm pretty sure I was the first one to identify the big cup and handle. The most recent cup and handle is the handle of the 45-year cup and handle. And that is predicting exactly what my price target, when you inflation adjust the 5250 high to today, using the currency supply measures, the Wilshire 5000, real estate, GDP, all of these things, it's predicting it's mid triple digits. And I really do think that we are going there, and we're going there sometime soon. We have to go there. It'll only get worse if there's a crisis, if there is uncertainty, doubt, and people are seeking safe havens, and simultaneously people stop spending on cars and homes and all of these things that require the base metals. So silver will go into a fundamental shortage at the same time, and above ground stockpiles have been drawn down because of these structural deficits. What's your take on that, Alan?
Yeah, I totally agree with you. It's just a matter of time. Things are out of balance, and the market, the price of the silver market has really been determined by paper silver, and all of these things have to unwind eventually. The big question is, well, when is eventually? I think it's soon, but I totally agree with everything you're saying. And Tina,
back in 2011, we had a big price spike it was late 2010, early 2011. And it took about 6 years for the output of the mines to sort of catch up to that. There's always this big delay. Mining is a very slow, it's like watching real estate. Real estate crashed actually pretty fast in 2007, 8, and 9. But still, it doesn't go up and down like the stock market. It's much slower, similar to real estate, but even more drawn out when it comes to fundamental supply.
Yeah, exactly. So I really appreciate Tino's comment here, and I do think that he's onto something, that the profits for mining and recycling will be crazy. However, because of all the reasons we've said in this video, it's not going to respond as quickly as you might think. There's not that much silver out there. A lot of it is a byproduct of other mines. There's no one to go out and prospect. There's no one to dig it up, or very few people relative to what there's been in the past.
Yeah,
so,
and most of the mines have already been, when prices are low, they do something called high grading. They go after the best part of the silver vein, and they leave the lower grade deposits behind. But it takes a lot higher prices to go back and mine that low grade ore. And so it's all a setup for a gigantic explosion in price. So yes, Tino, you will be right eventually. Now, another thing that's in the book, this suggests if the profits would be crazy, that also suggests that investing in the mining companies, the recycling companies, and all of that is going to be very good. But it's in the second to the last chapter, I believe. I did a study years ago comparing the Barron's Gold Mining Index, which is just the top tier miners, to the actual price of gold. And from August 15th, 1971, when gold became free trading, when the book was published, you would have done 8 times better just investing in the physical gold that cannot go broke. It outperformed the mining index by a factor of 8. Now, that was back when gold was below $2,000, and now we're up here. So I have we have to revisit that study again, because it's probably a factor of 12 or more right now. I have no idea at these levels. But here's one thing that I discovered many, many years ago. It was on something called the dead cat bounce. A dead cat bounce, some trader was being interviewed about some bubble that had happened, and then it crashed in a stock, and then it bounced. And he said, well, even a dead cat will bounce if you drop it from a high enough point. And so that's a dead cat bounce. The miners peaked on gold's dead cat bounce back in 1980. 81. So after the physical has peaked, that's really the time to invest in the mining companies. That's all from me right now. Have you got anything else, Alan?
That's it. I mean, we got a whole lot of information in the book, and I would encourage anyone who wants to learn more to go check it out. Only $19 on Amazon.
Okay. Thank you very much, and thank everybody for watching.
Invest and earn up to $2,000 in bonus silver at goldsilver.com. Visit goldsilver.com/free silver to claim your silver.